Welcome to our presentation on how to form a nonprofit in Montana. This presentation is for individuals who find themselves feeling really passionate about some issues, whether it's educational, whether it's animal care, or protecting people with disabilities. And generally, folks want to leave an imprint. Maybe you're the person who have money to invest in those issues, or maybe you have time that you want to devote to an issue, or maybe you're lucky enough to have both time and money. Some people in the past, some people have won lotteries and they wanted to set aside a portion of their lottery for the issues that's close to their hearts. Some of our clients sold their business shares and they wanted to also make an imprint on this world. Or maybe you've seen a natural disaster with your own eyes, and there is an issue or protection that you'd like to help with. So if you're a lucky person who wants to do something about fellow human beings, and you have an idea in your mind and you're playing with this idea, but you're not very sure on what the steps are on how to form a nonprofit, this presentation is for you. And to help you learn about the steps, there are three professionals who would be sharing their information and expertise. And we're going to start self-introductions with Natalie Black.
Hi, everyone. My name's Natalie. I'm an attorney at Worden Thane in Missoula. I've been with the firm for 8 years. I've been practicing for 6 years. And nonprofits is something that I started doing back when I was an intern here and learning how to help folks and being able to do even helping everybody get started on their nonprofits, and really got to learn from some great mentors here and have been doing it ever since. It's some of my most favorite work to do for folks, and it's just really rewarding to see how people start their nonprofits and watch them grow and still get to be a part of it. So it's really rewarding work for me. Just a quick note about me. We did a video with the three of us couple weeks ago. We're in the summer here right now, and so I recently got a kayak, and I told myself I'm going to try to hit 10 lakes in my new kayak this year. And so the last video I said I'd gotten to 2. Well, I've hit 2 more since then, so we're up to 4. So hopefully I can reach 10 before the end of the year.
Fantastic. I love it. My name is Lana Kadashnikov. I'm a CPA with JCCS with the branch in Missoula. I've been working with them for 18 years. And one of my favorite things to do for the community service is to be on the board of a nonprofit. I met so many passionate people who wanted to help in the areas that was very important to them. And it was so pleasing to see people help somebody else without knowing that they will ever get thank yous from the people that they're going to help. And that particular service, I just enjoy being around people like that. I enjoy learning. I enjoy helping people where I can. And I do enjoy doing the tax returns, filing the forms for nonprofits as well. So we enjoy this work. And on a personal note, my youngest son turned 21 years old, and we are thinking of going to Las Vegas to celebrate his birthday, not necessarily for drinking part, but for the exploration and walking and looking at architecture and the marvels of building buildings.
Thanks, Lana. I'm Alyssa Grimm. I also work in the Missoula branch here. I've worked at JCCS for almost 20 years. Time flies by when you're having fun. I started out my career preparing nonprofit returns, so I've been preparing them for almost 2 decades now. I can't believe it. It's hard to say, but I really enjoy meeting with my nonprofit clients and just seeing the impact and the amazing things that they do for the community and around the world. It's just really neat to see how passionate these individuals are. fact about me is I'm getting ready to go to Hawaii in a week, and I love getting into the ocean and going swimming and doing some boogie boarding. So, getting ready to go to cooler weather than here in Missoula, which is kind of funny. People usually go to Hawaii um, to warm up, but it'll be very nice.
Thanks, Natalie. Or thank you, Alyssa.
Yeah.
So when we think about forming a nonprofit, we it's kind of hard to picture what type of entity or how big it is, or what are your options, how big an entity can be, and what functions could it serve. And so we wanted to look and share with you a couple of classifications that possibly your nonprofit can fit in. And I'll talk about small association. So once in a while, you come across a very, very small unit of people who are gathered together to help out, maybe in small ways. So we're thinking about a small booster club for a school sport in elementary school or maybe middle school or high school. And those small associations, they earn smaller amounts of gross receipts. So if there is an association that collects less than $5,000 a year, this organization could be classified as small association, and this association is a lot less restrictive in terms of what forms it needs to file and what it needs to do for IRS.
So next thing on here is private foundations, and so that's another type of nonprofit, and it can qualify for tax exempt status with the IRS. So foundations different from say like maybe an association or a public charity, because generally you've got one donor or a family of donors that are looking to further a charitable mission, but it doesn't have the aspects of public donation. So it's not a public charity. So it automatically gets, it is a private foundation instead. So it's got some very specific rules. That's not what we're covering today on private foundations. So it's something that you'll want to look into if you're looking to set up a private foundation, either for yourself or for your family. And so you'll want to talk to an attorney or an accountant about that before you get started on that.
Another type of entity, or it's a public charity, what Natalie just touched on, and they represent the largest share of 501c3s, about 72%. And their goal, they perform charitable work, and they're, like in the name, it says public. Their money is supposed to come from a variety of sources. So government grants, multiple individuals, and then they also receive income from activities furthering the exempt purpose. So they have to meet this 33 1/3% test to show that their money is coming from the public to keep their 501c3 status as a public charity. And so there's just kind of different nuances with it. And when you're talking about nonprofits, you hear nonprofit, public charity, tax exempt. This terminology can just get kind of confusing and mixed up. Tax exempt is a word that covers a lot of different organizations. So it doesn't necessarily cover just public charity or private foundation. You got a lot under that umbrella. Another word that gets thrown around is nonprofit. So you hear nonprofit a lot, but really that is a state level term and terminology, and that's determined by each state. and it has its own qualifications. And that doesn't, just because you're a nonprofit, doesn't necessarily mean you're tax exempt with the IRS. And that's its own level of rules that have to be followed for that. And then public charity, which is what we're kind of focusing on today, is one of the examples of a non-profit here. And there's a lot of available resources out there that are very good. Like the Montana Nonprofit Association, they have a lot of good resources for nonprofits, or if you're just looking into it. Another place I recommend looking is at the IRS's website. So they've got this applying for Section 501c3 status, and also in there they have videos that you can go watch. So it's just a lot of good resources out there for people that are passionate about a nonprofit, or just what they're looking to kind of make a difference out there in the world. So first step, so you want to get something started. Where we recommend starting is kind of talking to the attorney to get things formed. Natalie, can you tell us about that?
Yeah. So Alyssa's right. You're no, and I want to start off by saying you don't need to start with an attorney at this stage, but I do recommend it just so you can start off on the right foot. And I'll explain later some pitfalls that I've seen. But generally, your first step you need to, after you got this idea, you're going, I want to help people. What do I need to do to get that 501c3 status? And so that's specific to the IRS. Now, before you get there, you got to do some work. You got to have some sort of organization in place, and that's governed by state law. So your first step is to form an entity. And there's 3 types of entities that can apply for tax exempt status. So there's associations that Lana talked about earlier, the really small organizations that don't usually have much governing paperwork. You can be a charitable trust and apply for tax exempt status. The most common one is nonprofit corporations. So that's what I'm going to be talking about today. And it's the one that I recommend that most folks are going to be using for their kind of like their entity vehicle to get to a 501c3 application that we'll talk about later. So now, nonprofit corporations are permitted under Montana law, and they're governed through Montana statute of what your requirements are for your governing documents, your governing board, and what you're required to do on a day-to-day or annual basis. So before you get going on any paperwork, first thing you got to do is gather your board and determine who's going to be your officers. So in Montana, you're required to have a board of directors, and you're required to have at least 3 people. So if it's just you right now and you're watching this video, go find 2 more people that that share this passion with you, or want to help you and serve on your board. So and now what those directors do is generally oversee the nonprofit operations, and they have fiduciary duties to the nonprofit. We're going to talk more about that later as well. Next, you need to have officers. So your officers are those are the folks that do the day-to-day work. That's your president, vice president, secretary, treasurer. Those are your usual roles that you see in those officer positions. Sometimes you see an executive director, and that's usually a different officer role. And now keep in mind, these directors and officers can be the same people. So you could just have the same 3 directors when you're getting going, and they can serve in these different officer roles. That's pretty common for new nonprofits when they get going. And as you grow and you get bigger, and you might find out that it's going to be better for you to have those positions broken out with, say, an executive director who's not on the board. And you'll want to keep in mind, family members serving on there. Again, that's fine at the beginning. And once you get bigger, you might want to look at finding some disinterested folks and finding folks in your own community that want to serve. So once you got your board and officers figured out, now you're looking at actually going and forming your nonprofit, which you do that by filing articles of incorporation with the Montana Secretary of State. It's all online through the Secretary of State's website, and you go online, you're going to make an account. If you're doing it by yourself, you have to make an account, or the attorney handles this all for you, and you file these articles of incorporation. And in your articles, there's a lot of different information that you are required to have under state law and by the IRS. So if you want to go apply for tax exempt status, there's things that the IRS expects you to have, and they're going to double check it on you if you don't have it. So one of those things is that you have to explain in your articles is what type of nonprofit corporation you are. There's 3 different options in Montana. You can be a public benefit corporation, mutual benefit corporation, or a religious corporation. Most folks, you're going to be in the public benefit. Just means you're a public charity and you're operating for the benefit of the public. Mutual benefit corporations are usually for things like homeowners association. Religious organizations are usually churches. And there's some, just real quick side note, there's a lot of rules about religious organizations versus churches under IRS law. So if you're looking at a religious organization, you'll probably want to talk with someone about that before you choose what designation you're going to make there. Next thing in your articles, you're going to be looking at whether you're going to have members. So sometimes nonprofits will be operating for the benefit of members, say if they're a club or something. So that's a question you have to answer in there. Another big one is who's going to be your registered agent. Now, this might sound familiar if you have a for-profit business entity, you'll know that you have to have a registered agent listed on the Secretary of State's website. This is just a person who's listed on the Secretary of State to receive service of process of legal paperwork. Classic example is that if your entity is sued, this is a person who is going to get served from a process server with a copy of the summons and a complaint that you have to go answer. So your only requirements there is that it has to be someone who's physically located in Montana, and you have to list that physical address on the website so people know where to find you. And it doesn't have to be an individual, it can be an entity, so you can hire someone to act as a process server. Now, the big thing that the IRS looks for in these articles is there's very specific language that you have to include in there. One is that you have to say in there a statement of purpose that the corporation is organized exclusively for charitable, educational, religious, scientific, or literary purposes. So that's very specific to the 501c3 that you have to have in there. The second thing you're required to have is what will happen to your assets upon dissolution. Charitable organizations, both in Montana and by the IRS, are required to distribute their remaining assets to another charitable organization upon dissolution. So the assets don't just go back to the directors or officers or any individual. It has to continue with its charitable purpose. Now, practical tip here, this language is super important. If you don't put those in your articles and you go and apply for a tax exempt status, your tax exempt application with the IRS will be denied. And that's actually happened to a colleague of mine where you actually have to upload those articles to the Secretary of State's website. And if you don't do that, which the Secretary of State's website doesn't prompt you to do that, you actually have to go and physically upload them after either during your application or your Secretary of State filing or after that. And if you don't do that, the IRS goes and checks that. They go and look to see what your Secretary of State filing is, and they go and look at what your articles say. So if you don't have those uploaded on the Secretary of State's website, the IRS will deny your tax exempt application. And that exact thing happened to one of my colleagues, and they had to start all over with their application and get that fixed. So that's just a one tidbit for you. Make sure that your articles have everything you need in there so that you don't end up getting in trouble with or getting in trouble with the IRS for not having it, or more so that your application is going to get denied and you have to redo it. I will say another point on this is that you don't want to get your articles off the internet, because they're likely not going to conform with what Montana law requires. And you'll probably get the language right for the IRS, but boy, it's a big thing to make sure you get right. I'll tell you, most any clients that come to me and they've kind of started through this process and they've done their own articles or they've filed their own entity with the Secretary of State, it's the biggest thing I have to go fix is going in and restating their article so it has everything that Montana law and the IRS requires. So it's one thing if you're on the fence about hiring an attorney or talking to an attorney or an accountant, do it at this beginning stage, just because those are things that are going to cost you more money. And that's really comes down to maybe the attorney's time, but also filing fees. So you have to pay every time you file something with the Secretary of State. So those just add up if you don't do it right the first time, unfortunately. Okay, that was a lot on the articles. I'm going to breeze through here on a couple other things, but there's a lot more paperwork you need. You're not done just when you file the articles. You're also required to have bylaws. So the bylaws is what govern what the directors and officers' authority is and how they will operate. So it covers things like their meetings, voting, elections. There's a lot of specifics that Montana law requires in those bylaws. So again, this is not one where I recommend getting off the internet, and it's probably best to start with form bylaws. So for example, I have bylaws that are the minimum requirements, what you need in Montana. And so they're just a good starting base for you, and you can make changes from there, but at least it gets you so it's hitting all the requirements under Montana law. Another thing is organizational minutes. So you need some paperwork that says who the officers and directors are and who has authority to act. Specifically with opening up a bank account. It's just one of those documents where the bank isn't going to open up an account for your nonprofit unless it's got someone on there that says, yes, this person has authority. The board has determined that this person has authority to open up this account. So a couple other documents in here, but those are the big ones that you'll definitely need when you get going. There's a couple other policies, and we'll talk about those later on. So once you get all that paperwork done, you got to get an EIN. So you're going to need to get a tax ID. That's the EIN. So, which is important that's your ticket for donations. That's what you want to be able to give to your donors when they give you a donation, and you give them the tax ID so they can get a charitable contribution from that. So you can apply for this on the IRS website, and it's one of the things that you'll need as well to open up a bank account. So that's an important piece with when you're ready to go open up that bank account. You're going to want that EIN. You're going to want your articles of incorporation that were filed with the Secretary of State. So you'll want the Secretary of State printout. They'll email you information on that. You'll need your bylaws and then those minutes I was talking about. So that's a lot of steps for the formation piece. And once you get that all done, then you're looking at filing your tax exempt status. So unfortunately, just getting to a Montana nonprofit, getting fully formed, you set up your bank account, you're ready to accept donations, you're not tax exempt. You're just a nonprofit corporation, but technically you're still required to pay taxes unless you apply to the IRS and the Department of Revenue for that tax exempt status. So Alyssa, can you tell us more about how to apply for that exemption?
So you have to fill out the forms 1020 or a form 1023. So there are two different versions of it. There's the more expanded form is the 1023, and that has a IRS user fee of $600. And information that you'll need for that are your organizational docs that you have set up, your EIN that you probably already have set up, narrative and budget. And then the 1023 EZ, it's a $275 filing fee. And that form's a lot shorter than the full 1023. You have organizational docs, EIN, and mission statement. And so that they don't give you a lot of room to fill out the mission statement, right, Natalie? I think you were saying they give you 275
Yep. I was just
characters?
working on one earlier today. It's only 250 characters. So for the streamlined easy, you have to have a really short mission statement. So a lot to try and pack in. A lot of stuff to tell the IRS and only 250 characters. So it's just a short and sweet mission statement.
Yeah. Yeah. Just, I mean, you can file these on your own, but we recommend coming to an expert. I refer my clients over to Natalie to have her help. Do you want to add anything to 1023 or just?
Yeah, I'll say a couple things on that. So when let's start with the easy, because if you qualify for that, that's definitely the way to go. It's cheaper. The form's only 3 pages, so it's a lot more doable. If you're going to apply for if you want to qualify for the easy, your assets have to be under $250,000 in value. So the fair market value of your actual assets that's going to be in this nonprofit have to be under $250,000. And then your gross receipts have to be under $50,000. So the gross receipts is what your donations or what you are, if you're selling stuff. So it's like what you would receive in those revenue, stuff like that. So anything, and it's gross. So it's before your expenses. We're looking at what that is. So if you think for the next 3 years that your budget forecast will be under $50,000 in gross receipts, you don't anticipate exceeding that, then we can go ahead and file that easy. A question I get a lot is, so what happens if, things go great and we end up exceeding that? That's okay. That's good. I want to hear that. But at least for purposes of the fundraising and the work that you're doing when you're filing this application. So at the time you're about to file that application, you're telling the IRS, I don't think we're going to get over 50 grand every year in gross receipts. And so, yes, the answer is we can still do it, even if you think, or even if something happens 2 years in and you explode and you get lots of donations, great. You're not going to get penalized for that. And so now a lot of folks are going, we think we need to do the full form 1023 because we either we're above that, we anticipate getting over 50 grand in donations every year, or sometimes they're looking to attract donors or say grants. So for grant writing, having the full form 1023 is really attractive because it's a public document. So those grant writers or funders can go and look at your application. So it's a good resource for them. You'll want to do the full form. That's the $600 one. It's really big. I actually printed it out. And you can see it's let's see, how many pages is it? It's about 26 pages. I mean, it's a big one. It's got lots of schedules. There's a lot of information that the IRS wants. It wants a really robust narrative, wants to know the who, what, when, where, why of what you're doing. And I'm talking pages of information. They want to know exactly what you're doing. So it's a big form. And so my big tip on that is if you're familiar with IRS forms, you could totally do this yourself. You're going to need to know, be able to budget and forecast for the next 3 years, be able to really be good at explaining what exactly you're doing. And there's good instruction. So if you have a lot of time on your hands, you feel really comfortable with the IRS form, you've got a background in finance or tax or accounting, bookkeeping, stuff like that, you could do this on your own. So the benefit of going to an attorney for this, or a preparer to file these, is the expertise. Like I've been doing this for years. I know exactly what the IRS is looking for, and so my job is to get this application approved. And I want to get it approved on the first try without the IRS asking us a bunch of questions later on. So that's my job of why I think it's important to hire an attorney for this. But just so you know, if you're looking to save that time and cost on there, you could definitely do it yourself. So
wonderful. So I wanted to do a little recap. So we talked to you about you have a passion, you want to help fellow human beings. And so let's say you went to an attorney, you got all of your paperwork done, the legal paperwork. You filed them with the state. Then you also went ahead and filed Form 1023, and the form is being processed by the IRS. So in this process, it does take a while for the form to get reviewed and approved. On the shorter cases, let's say the average time it takes 4 to 6 months to get your approval. So some of the clients are asking us the question, so while I'm sitting and waiting for IRS approval, I've got friends, I've got family, I've got business associates who want to support this newly formed organization, and they want to do donations. So the question comes, can we accept donations? And the answer is yes. So in the eyes of the IRS, while your organization is waiting for the acceptance of the tax-exempt status, your organization is deemed be allowed to receive donations. So if donations are below $250, no written acknowledgement is required. If your friends or co-workers are putting donations at above $250 level, then a written document has to be provided with your organization's letterhead that has your address and the contact information. In the body of the letter, it's preferred to say that this organization is applying for tax-exempt status. And the people who receive your acknowledgement, they could use that deduction on their tax return. However, let's say that 6 months passes and your organization gets acceptance of a tax-exempt status. Hooray, that's wonderful, that's great. Then nothing needs to be done going back and looking at those donations. However, if your application gets rejected, then all of those donations that people gave you in the interim period, they're not going to be allowed as a deduction. And the communications have to be sent out to those folks, letting them know that your application was rejected and thus the donations are not deductible. In our collective experience between three of us, personally, we have not had an experience where this application was denied. As Natalie has stated, when you have experience of working with nonprofits and applying for the status and having to do so many of them, we know what auditors ask for, we know what information to provide, we know the elements that go inside putting it together, and so we have not had a chance to have any application rejected, but we know of other people who've had them rejected. So let's say you got your acceptance from IRS. That's such a wonderful feeling, and it's such an official form. You get it through the mail, and it comes from IRS, and it says you are granted your tax-exempt status. Feels wonderful, and you feel like, hey, I'm almost done. And it's like, not yet. You're halfway there. So there is one more little filing that needs to be done, and that's the filing with the state of Montana, with Department of Revenue, this organization needs to let Montana know, hey, I was a non-for-profit when I filed all of my legal paperwork, but now I applied to be tax exempt with IRS and they approved me. So there is a required notification. It's a form that needs to go to Department of Revenue, letting them know, hey, I'm tax exempt and I do not need to file a tax return in Montana. Well, sometimes in this process of going through all of the motions and doing the required things, the step gets missed. And if it happens, then Department of Revenue sends a nice letter to the organization saying, hey, we haven't gotten your tax return yet. What happened? You need to file one. And there are some things that we can do to go back and provide the needed documentation and needed forms to get that ironed out with the Department of Revenue. See how exciting this is? The formation is a little tough. Yes, it takes some patience and some time, but knowing what the steps are putting you in a position where you can lay out a map in your mind. Okay, I do this first, this second, this third. So this is a third step. And what's the next step after that? Well, now it's the time to see the CPAs. It's the time to go see Alyssa and Lana, because we've been talking about tax exempt, and maybe some general public is thinking, oh, tax exempt means you don't have to file a tax return. Well, that's not true. Even tax exempt entities have to file informational tax returns, letting IRS know what's happening with this organization. And so if you were to ask the question, well, what kind of tax returns are there to file? At first I thought maybe there are none, but how many types of tax returns can tax exempt public charity have? And so there are several of them, and I'll talk about the easiest form. Oh, I'm sorry. I'm gonna let Natalie talk about the easiest form.
That's
Take a
me.
second.
Yeah.
You.
So the easiest one that I do, because it doesn't require too much, is the Form 990N. They actually call it a postcard filing. So generally what that means is that if you're under $50,000 in gross receipts for a 3-year average, then you can do this postcard filing. There's some rules for when you're brand new. Like if you're in your first year, it's actually 75,000. Just check the IRS website if you're doing it on your own, just so you know what those rules are before you go file that 990N. You go file it online on the IRS website, so you have to make an account on the IRS platform there. And really, it only asks you a couple of questions. They want to know, one, were you under this 50,000 or average under 50,000 in that tax year, and who's the responsible party? So it's usually one of the directors, whoever's filing it, and then they want to know what the address is. So and once you filed it once, it's going to keep that information. So then you're just really checking to say, yes, this information is correct, or no, I got to update a different address in there. So it's a pretty easy form, which is why I feel comfortable doing it, because I don't have to do any tax work or any finances to do it. But yeah, these gals will talk to you about the other types.
Fabulous. The second easiest form is called 990Z. It's called the short form. And the reason for the short form, this form has only 4 pages, and it's a relatively shorter tax return, and it's filed for your tax-exempt public charity if the charity had less than 200,000 gross receipts that's averaged for 3 years, which means that if 1 year you had $230,000 of gross receipts, but another year you had 150, you still qualify to file the short form. And assets have to be below $500,000 mark. And on the next slide, we'll tell you what documents you would need from the organization to file those returns. And Alyssa, do you want to talk about the long form a bit?
Yeah, the name is in there, the long form, the nickname for it. So it's an expanded form. So it just shines a little more light on the organization's policies and procedures. It also includes some extra schedules depending upon what the organization's doing. So you might have, if you have a fundraiser, you might have to give a Schedule G and kind of give more detail for your organizations. Fundraisers. It also, kind of bouncing back up to the 990, your balance sheet. So snapshot on what the organization had that day right at the end of the year. On the short form, you don't have to put a lot of detail, but on the longer form, it lists more of your assets. So it separates out cash and say the organization has equipment, or organizations also owed any grants. It lists it on there. So you just have an expanded list there. Another part that you're going to be expanding is for 501c3s, the non-public charities. On this 990 form, they're required to fill out a form called Statement of Functional Expenses. So instead of having your expenses just on a shorter schedule, it's going to expand it into more categories, and then it's going to go into 3 different columns, like admin, program, and fundraising. So that long form just has some more information that we fill out. Organizations do have the option of filing the long form if they want to, even though they qualify for the other ones. So they might want to do that to attract more donors. So just different donors might want to see a Form 990. And then the last form we'll talk about today that a public charity might have to file is a 990T. So that's if they had unrelated business income. So income not related to the organization's mission. So that might be something like rent, advertising, just a bunch of different things just to be aware of. You just want to keep that in the back of your mind. So just so you don't get caught off guard. And let's talk about some more practical tips on what's good to know about running nonprofits.
Yeah, so I'll talk about the first thing on here about fiduciary duties. Generally, directors of a nonprofit are considered fiduciaries for the organization. And that just means that they have to act in the best interest of the organization at all times. So Montana law kind of breaks this into 2 different types of duties. Your first is your duty of care, is what we call it. And the legal answer for what that is that it's what an ordinarily prudent person would exercise in a like position and under similar circumstances, which is legalese for just saying what would a reasonable person do in the same situation. The other one is a duty of loyalty, and that's just a duty to avoid self-dealing. So you cannot put your interest ahead of the nonprofit. You can't usurp a business opportunity of the nonprofit for yourself. You can't self-deal, so you can't take funds out of the nonprofit or use assets for personal purposes. And the big one is also avoiding a conflict of interest. So you can't, you have to be really careful when, say, if you have a business entity that's going to contract with the for-profit or the nonprofit. So if your for-profit business is going to contract with your nonprofit organization that you're a director of, that's a concern. The IRS doesn't want to see that without going through a process of disclosing the conflict, and you have to be really careful there. So just keep in mind that you've got some fiduciary duties, and I'm not trying to scare anyone. I encourage folks to serve on boards, but these are really important. This is an important duty that you have to these nonprofits when you serve on these boards, and you could be found personally liable and possibly jeopardize the nonprofit's tax exempt status if you act improperly. So it is an important thing that you want to make sure you understand when you sign up to be on a board. So the second thing on this list, other practical tips, is just policies you got in place. So, early on we talked about what do you need for formation. In addition to those governing documents like your articles of incorporation, your bylaws, you should also have some policies in place. So one that the IRS requires is a conflict of interest policy. You have to have that. It's one that you're supposed to have before you even go file for tax exempt status with the IRS. The next thing is a document retention policy and a whistleblower policy. These are preferred that you have these by the IRS, but they're not necessarily required for applying for tax exempt status, but they are recommended. Some other policies that you'll want to consider, particularly as you grow, that you want to think about is things like maybe a gift acceptance policy. So that just means like how you're going to accept gifts. And then if you have employees, then you're looking at maybe some employee policies like a handbook or contracts, independent contractor agreements, stuff like that.
Yeah, and piggyback off what you said, Natalie, that when you have a board, they do have a legal responsibility on how this tax-exempt organization is run. And so one of the things that we see as CPAs dealing with nonprofit is, as board members, you are responsible that the organization files all of the proper forms on time, where the forms are done properly. So one of the examples I did want to share with you is, say a tax-exempt organization, public charity, has employees and everything is working fine. But let's say something happens and the payroll reports were not done timely, and the payroll tax that's supposed to be paid, for those who have a paycheck, how you pay Social Security and Medicare tax, and where the employee pays half and then your employer pays half. So if payroll reports were not filed timely and the payroll taxes have not been paid in, IRS pulls this debt on the shoulders of board members, and then board members become personally responsible for paying that debt. And I know this sounds really, really scary. And in order to prevent such occurrences, it's really good to have best practices at hand. When you're a board member, let's do everything correctly. Let's have a good bookkeeper that know how to file payroll reports. Let's have a good team and good group of people so that this organization runs very well and there is no late reports and there is no late payments. And another point that comes is, as much as you want to do everything correctly, there could be things that fall through the cracks, not because you're intentional about it, but somebody gets sick, something doesn't get filed. A lot of tax-exempt entities choose to have errors and omission policies in place to lower or prevent larger liabilities to be shouldered on the board members' personal liability. And there are a couple more practical tips in regards to 990s as well that Alyssa can share with us.
Thank you, Lana. So another tip, practical, is level compensation. If someone's being paid $150,000 or more, you've got to answer some more questions on how that compensation is determined and how it's compared. So just the IRS puts a little more scrutiny on nonprofits just to make sure somebody's not personally benefiting interment. And then another good tip is you want to have a way for your board to review that 990 before it's submitted. So we recommend like having your board meet, or sometimes they'll email it and there might be questions from the board members. So they know what's being filed and can be familiar with the organization on what's going on. And then another item that you just kind of want to keep throughout the year is a board member roster, and you want to send that to your CPA early. And on the nonprofit return, you may think, oh, I just have to list the board members that served at the end of the year. No, the IRS wants everyone listed that served during the year. So say someone only served on for the board for a month, we still need to list them on the tax return. Another item that might just be surprising to some nonprofits is that the tax return, it is open for public inspection. So you want to keep an extra copy available. And that's another question that's on the 990, how if someone asks for a copy of your tax return, how do you disclose it? So it can be website upon request, and I can't remember the other one right now, but um, it is public charity, so the organization really belongs to the public, not just to those board members or just specific group of people. So you're benefiting the public, and you're getting the benefit of not paying taxes on the income. But um, thank you guys for spending time with the three of us, and good luck on your endeavor of starting a nonprofit. Um, if you're watching our video here, our phone numbers are listed here. Please give our front desk a call to schedule an appointment with us, either in person or over the phone. We're very passionate about nonprofits, and we're just happy to help.
Yeah, good luck, folks.
Thanks, guys. Good luck to you.